simple moving average, right? So let's discuss. That's what I said. So in order to add the simple moving average, so right click again, go to studies, say edit studies, then say simple here. You see the simple moving average? Select it, add it. Okay. Okay, by default, the simple moving average is 9. Its period is 9. That means 9 day of average it will calculate. Okay. So for simple moving average to take advantage of it, you need minimum 2 simple moving average with different time periods. Okay. So the first simple moving average we are going to have is generally what some people use is, you can define any days you want. So I'm going to little bit make it with, and this one let it be this signal. Suppose okay, that's fine. So this is 5. Now add one more, then select this one, say add selected, then say 20. Okay, and I'm going to choose another color for this one. This one. Okay. So 5 cross 20. 5, one is 5, one is 20. Okay. So how do we interpret this one? Okay. So basically, what is this symbol? So this is a simple one. You can add as much. I'll come to that point. Okay. So some people are using when the 5 cross 20, you go long, you go in that direction. Now 5 is our blue and 20 is our what? Pink, right? So look at here, when the 5 cross 20, 5 cross 20. So the crossing is here, your entry is at this point. Okay, this, not this candle. Okay, you have to wait for the cross to confirm. So when the wait to confirm, it's not. So even if it is coming and doing it, don't do it. Okay, so after this one, this candle closes, this is your confirmation. So once confirmation, if the price moved up, still if it is still up, still take the entry of the down. Okay, so you are basically bargaining. So you are entering negative. Now what happened? But this is a closing time anyway. I'm not sure it's a closing time. So okay, anyway, that's fine. Don't worry. So you took the trade. That's a negative. So 5 cross 20, that's your trading signal. Okay. Now, if you confirm, look at here, guys. So if you see 5 is crossing 20 at the same time what SMACD is doing here. Is it matching for you? It's a jackpot, right? 5 is crossing 20 and this is also crossing. So together you got the double confirmation to go what? Short, right? And it went there, hit this one, came back, but by the time you already got your profit. If you are a day trader, if you are a long-term trader, then this signal is not for you. Okay, this entry, this 5 plus 20 is only for the short-term traders. When I say short-term traders, either you are here for only, you are waiting for only few hours of trading, or 1 or 2 days trading maximum, or maximum 1-2 days or 3 days trading. Okay, if you are planning to hold weekly, week or month, then this is not the SMA you will be using. Okay, you'll be using different SMAs. Okay, SMAs like 50, 100, 200, those are the signal, or those are the time period you'll be choosing. This is very short term. Okay, if you are kind of using for, as I said, that few hours or few days, 1-2 days maximum or 3 days maximum. So now what happens here? You entered here, after 2-3 days you are done. But if you are not, it is going to take you out. Okay, you see that? Now again, I'm not sure, there is no signal here for you, but if you want to continue, there is a drop here. You can say it's a retracement and continuing. Okay, coming down. Now the same thing here, watch out here. If the signal, what happened? The MACD has a cross and this also has a cross. You see here a nice candle here. So when is the entry? Is this candle is the entry or this candle is the entry? If you are entering this candle, you are wrong. But as per the MACD, you are right. But as the cross, you are wrong. Okay, because the cross didn't happen. Cross happened after the candle was finished. Okay, then your entry point is this candle, beginning of this candle. So 4438, boom. What is this one? SPX. Okay, 4438. I remind of 300, almost 250 points. Okay. You see that power of magic. But if you see here, this is a kind of, and now let's see here. I didn't go back testing more. So we can do a little bit more time frame, right? If I'm going to 1 hour, I'm not going to use this. I'm going to use ES for this. So you want to match it and find your entry points. Okay. So look at here. This is in the after the market open, 5 p.m. it was crossing. Then you have a divergence I told you earlier, and crossing confirmed at this candle. This is an entry point. Boom, and you crossed it here. 5 cross 20. If you want early signals, there you can use different time frames, but we have a different time frame in the futures. If you join the future class, I can tell you. But for now, this is the setting you can use for the short-term trading. So, and you can see here, and why I'm using 20. So 20 is kind of industry standard, okay, and 20 will work as a resistance. 20 will work as a resistance or support, okay. So in a downtrend, it will work as a resistance, and in the uptrend, it will work as a support. Now, what do I mean that one? Let's see. So now you enter, cross it, right? Now crossing, so you are in the trade and you took the profit, okay? Are you going to stay on the trade? Are you going to stay on the trade? The MACD is still here. As long as it didn't cross over 20, you can still stay on the trade with the stop losses moving, okay? So if you sort it here, your stop loss was here. Now it came down here. Suppose you took 5 contracts, 22 contracts, okay? So now you entered here, your stop loss is here, but when it moved, you moved your stop loss. Now it is bouncing back. Are you going to exit? You may not exit because it didn't cross this line. You see here it came down, used as a resistance here. This one is used as a resistance, okay? Now, boom. So now you move your stop loss as long as it's not going, taking it out. Now, slowly what happened, it hit here again, okay? Still it didn't close above, okay? Now came down, it still came down and touched here, and you got the full profit. Either you exit here, it's up to you, or you are waiting to stop out here if you are very close, or if your stop is here, then still you are in the trade and you're taking the trade here. Now, whenever it is crossing, then you can also close the trade. Okay. You can also use the automated trading to do this one, but basic manual trading is better. Now, there is a junction here, like it crossed. Are you going to go long? After taking the so much profit, it should not, because it's a complete downtrend. The downtrend upside, immediate upside is not going to help you. Okay, then you have to wait for a nice, again, market open, next day, the same thing, divergence. Again, it was crossing this, that. So, but you will be depending on the MACD. Here, you have to take the help of MACD, decide which direction you want to trade. Now, tell me, which this direction? It crossed it, then again crossed it. Okay, again crossed it. Okay, but this cross is, are you going to support this cross? No. Now, what happened? This one. What is the help I took it? I took the help of MACD. Because MACD is telling I am not going up. Okay, I am still weaker. Even if, because this is short term, remember this is short term. Okay. So finally what happened? MACD won. Okay. So your MACD and the SMA cross is going to help you to change, follow the direction and stay on the trade. Stay on the trade longer. Okay. And you that. So you see here this following the 5, it still didn't go here. The moment it came down here, and you can see here this is a retracement, 38.2 retracement mostly. And either you follow the retracement or follow this one. It hit this one, boom, again one more. So if you are in this trade, you are making up like whoever is trading ES, and you see here how much they banked here. Even if they entered here, this 4487 or 90, and I don't know what time is this one, but whatever. It came down till 4385. So 4490 to 43, almost 100 points. You know, 100 points means 1 ES, 5,000. Now the same scenario here again. Now there is a big, and this is spreading, but this is very short term. So before the market opens, after the market opens, it went down, but the cross. Okay. Now, if you want to add more, and here you can add 50 and 100. Let me change the color. The color for this 100, I'll make it red. I don't see any red here. Okay. 50 color is what? Hello. You have to figure it out. Okay. So now let's go to SPX. Now, if you are following SPX, what is this yellow line? It's a 50 line. Okay. What is this red line? 100 line. Okay. So 100 is slower, 50 is little slower than faster than 100, 20 is little faster than 50, and 5 is much faster. Okay. So which one? If you are, as I said that if you are a long-term holder, then you don't have to follow these two. You have to follow these two. Okay. Now look at here, the longer term SPX, right? SPX hit here. Okay. It came down here below 50. It used this 50 line as a resistance. It came down. Again, you see here, it is following the 50 line down. So it came down, it went down, came down to 50. Sorry. It came, is it right one I'm using? Okay, I'm using 1 hour. Sorry. Let me go to daily. That's something I saw. So look at here. So that's what I was worried a little bit, because the SPX went off this 50 and it had a cross. This is the 5 cross 20, but 5 cross 50 and 20 cross 50. So this was a very bullish signal, and also it crossed 200. But right now it is in a very crucial junction. Okay, because there's a 50 line, it is already below the 50 line. Yesterday it closed above 50 line. Today it closed below 50 line. So that is concerning me now, because it may pull it to down more. Okay, and that's why I was waiting for the close. But somehow if the next week it goes above back up to these lines, okay, that means you can think of a retracement from here. This is a 61.8 retracement right now. So I am not sure if it's going more down that one, then that will be a very disaster. And but here we are learning. So you can, if you have 3-4 lines like this, you don't have to get confused, right? So now the moment it cross 50 line on the daily chart, this is a very kind of, it depends on which side it is crossing. If it is crossing down, this is bearish. If crossing up, then it is bullish. If you see here, so it was up from here to here, you got a very good numbers. Okay, but unfortunate, for last few days, it keeps going down. So that's why it is breaking this line. So it may use this as a support line, and we have to see in the next week. Okay, the same thing, you go to any stocks, like suppose the Tesla. Look at here, Tesla is using now 100 as a support. So it had a big run here, it is using 100 as a support. If it doesn't break below support, then it can use this one as a very if it cross above this line 1030, you can see Tesla is going to 1100 again and 1200 MACD. Okay, the same thing with the Amazon. Yesterday it had a big run, but today again it went down. So it is again a crucial junction here. It went up to about 200, but right now below 50, and that is what concerning now. So we don't know what's going to happen because the earning season is coming. At the same time, MACD has also shown a negative and it's growing. Okay, so that is also concern. But once it started weakening, so you can see it. Okay, so this is where we are kind of a little bit very crucial junction period. Google is kind of very bearish, but if you see here 1, 2, 3, 4, 5 times, it's a kind of a, it's again and again coming here and bouncing from here. So we need to see whether it is doing the same thing again. So it may come down. Okay, but if you see here, so it had a pretty straight run. Okay, but this time it is having a very tough time, and it's kind of a channeling here. Okay, now I don't know which stocks you want. So SQ. It's also a good thing. So if it is using this one, then we may see a more upside. Apple, I think it is in a better shape. So not sure. Now Apple is still also losing the strength. Okay. And that's also, but if you want to use this, so if you want to work the moving average work for you, then don't use so many moving average lines in your chart, and don't make it too much complex. Okay, too many lines, too many things, so that may confuse you what you are doing, right? So now let's see, you see your ES also, it is losing its strength. ES is kind of a related to your SPX. Okay, now ES generally people don't do for days. So basically, suppose you want to 15 minutes, you can see here what it is doing. So it's the same thing. Okay, so it depends on what numbers you'll be using, but I'll not use definitely for this one. So I can go edit. I'll just use 2 or 3. Okay, so I'll do another. Okay, let me remove this 50. I'll tell you another one. So for this 50, I'm going to use another one called 15. Okay, so just watch this. And I'm going to remove this 100, apply. And this is for short term. Okay, so what I'm going to why I added 3 is, if you have a 3, this is a more confirmation for you. Okay, I'll tell you what. So let's see here. Okay, yeah. So basically, whenever the cross happens, right? So which cross is very important. Okay, so whenever these 3 lines, the market cross together these 3 lines, you see your one period is here, it crossed and you got some points. Again, it went up. In this went up, it's not a 3 cross together, right? But here is a 3 cross, right? It is crossing the 3 lines together exactly. This is point. So this is a more strength. Okay, and you see here what happened, right? And this is a 15 minutes. Okay, so you can see the result in 15 minutes. Okay, now look at here. This is also, it crossed 3 kind of together. So basically this one crossed, so closed above these 3 lines. Okay, and crossing also happened. So that's a more bullish. Now let's see here one more. You see here these 3 together. Okay, and where is the 3 together again? Kind of 3 together here, not to the upside, to the downside. You see here in the 11:30 today, 11:30 PST, that is 2:30 EST. You see here what happened? It went up, okay, but it was not surviving. It didn't cross. Did you see the cross happen for everything? No, right? By the time cross happened, what? There's a red candle. So now wait. Now it is here. It crossed 3. So if you take a shot here, boom. Okay. So basically you're falling. And as I told you, your 20 is working as a resistance line. Okay. Now this is the, now let's see here. Now this was one of the, okay. So when you are seeing the strength here, whenever this 3, it is crossing the 3 together. Look at this one. These are all jackpots, right? These are all jackpots. Where is this one? Right? Boom. You don't look at the time period. Time period is different. I'm just showing you the impact, right? This one was crossed. You may not think this one, but in the next one, if you see here, it followed. So the ones it bounced from this one, this was the entry point. This was not exactly a right entry point, okay? And this one also kind of, it's not that much strength because it had a big candle and it's a very big gap and it crossed together from here to here. So this is, I'll not enter here. I'll wait for a little bit, see here. So, but it was not able to stop. So this is not a right cross here, but this is a right cross. You see here, cross with a nice candle. That's it. Okay. So can we go a little more further? Here is one, if I didn't go through this. Here is another one. This one is also a good one because 6:30, if you would have gone long, that is not wrong, but it might have taken the stopped out, but don't, you can still go short based on this one and cover the profits loss from here. But in this case, you should not go upside. No, I think there is everything. You have the upside to decide, but you might be wrong because of the news or something. Okay, MACD was up. Okay, it was up. It crossed everything. Even if you go long, suppose it is, you had a profit here a little bit. Okay, so like from here to here, you had a profit. After that, it took it out. So basically, you are stopped out. Then when you see this candle close, make sure you wait for the candle to close. Even if it is trading like this, don't take the trade in between the candle. You have to wait till the candle is closed. That's the bottom line. Okay. Now take the candle start here and you have to wait till the stop loss is a big stop loss. Okay. And you are a big profit. Okay. Now what is the next one? Here is the next one, good one. And always try to match the MACD here. Okay, so I think you are the winner. Let's see. Here is one more. Here is, where is another one? I don't think here. This is the good one here. And I think I see Rick. So Rick, 5:30 before the market opens. You see here, you are already the winner here. And this is continuation. This trend is continuation, but your entry point is somewhere here. Everything is below. Basically, your candlestick is below these 3 lines. Okay, so you can enter anywhere here, and you can still continue because it's not going above this line. Okay, I think I clarified you what the cross is and where the strength of the trend is, and what is the strong. Do you know? but the strong entry point, right? So here is the strong entry point, and you are able to correlate, right? So MACD and cross. If you just use these two signals, you don't need any other signals. Again, this is free. Okay, I taught you free, and try this out. Okay, this cross and this cross. If you can identify this cross in the right time, in the right period, you'll keep making money. You don't need my signals as well. Okay, do you understand? So, and if you are able to identify this, you don't need any other signals. Okay, take my word. Okay? You have to identify this cross more frequent. Okay, if you are a short term, what ways for this? So you can have multiple charts or something, and you can take it. So this cross, does that make sense?
This is also correct for any other stock like XPX or anything, or just for ES?
It is applicable for any financial ticker. Okay, it may be SPX, any stocks, any forex, any crypto. Okay, whatever. Okay, this is universal. Okay, this is universal. Okay, so but it depends on the time period, whether you're a short term or long term. Okay, so the short term, then you will have a short term gain. In a long term, you'll have a long term gain, right? So that's all. So you just have to keep changing the time period. Okay, now see here, if ES, or suppose example of Apple, right? And look at here the cross, right? Look at the cross here. Look at the cross here. Look at the cross here. This cross was not good because it's too far. It should be very close. Okay, you see, you can see the difference, right? You see the cross here. Okay, though it was little far, but still was okay. Now see the cross here. Now it is showing very bad, right? It has already crossed and it's going to go down. Looks like it says no escape. Okay. That's a true. Okay, that's the true fact. Okay, it will not survive here. Okay. And look at this cross. Look at this cross. You got something. Look at this cross. Okay. All this cross. This is on the daily chart. Okay, but if you don't want, then go to hourly chart. Look at here. You'll find some instance. Okay, where you'll be okay. 8 o'clock. Boom. Today's 8 o'clock. I think 6 o'clock. I think it's today's chart. Okay, that's it. And yeah, any other questions, guys?
Ravi, I wanted to understand, like, how did you configure this for like just like daily? If you want to just play daily, like you have to select that 15 minutes somewhere, right?
Yeah, here on the top, here you see that.
Yeah. Okay, got it.
Here you go daily. This per daily. Okay, and 15 minutes. You can also have a time frame, custom time frame. Okay, and suppose daily you want, suppose 5 years. Then you'll have a long.
No, but if you are just like for trying for like intraday, like just in and out in a day.
For
like
intraday, you don't have to use daily. You can use
15 minutes or 30 minutes.
Actually, 15 minutes and 1 hour are kind of recommended. Also, even 5 minutes. Okay, so
okay.
Every 5 minutes something can change. But yeah, for intraday, yeah, you can use this one. When MACD is the most powerful. Okay, that's why I'm teaching you. Those who didn't attend, they missed a lot. But if they know it, I don't have anything to say. But I think hopefully you guys got something, right?
Yeah.
You see the proof, right? So which signal you think it's better? MACD or SMA? Or together?
Together, I think.
Yeah, together. Rick, are you there?
So if you do it in a let's say daily, so if you see a little up or down, you don't react. You have to wait for, because it's a daily chart you're looking, right?
Yeah, you have to wait for the whole day to wait. Okay, close. Okay.
If you want like a intraday, so you look for like 15 minutes or 1 hour, and then you react on that.
Yes.
Thank you.
So past 15 minutes, 20 minutes, you just watch the market. Then based on that one, take the trade. Like see here, 6:30 market, 6:15 it was there, 6:30 you dropped. And you can take the trade here, short, buy a put. Done. Right? This for Apple,
Yes.
SPX.